attract new clients. And that's the most costly, the most time consuming and the most inefficient way there is. When you consider the cost of running ads, sending out mailers and paying for telemarketers, then what it costs to qualify your prospects, either in person, by telephone or by mail, as well as the entire sales process, the salaries, the commissions, the bonuses you pay your staff, and then you calculate in your overhead and all the other attendant expenses, it's easy to see why it costs 6 to 8 times more to get a new customer or client than it does to sell to an existing one. And that's why it's 16 times easier to sell to an existing customer than a new one. In fact, most business owners don't even get enough new customers from their ads or sales letters to break even, let alone make a profit on the products they sell from those ads or letters. The simple truth is, as important as getting new customers or clients, and as expensive as that activity is, it's only the second most costly thing you can do to grow your business. The real money sapper, the single most expensive thing you can do in your business is to lose a customer. And the easiest person to sell to is an existing customer. With those facts in mind, let's look at what would happen if you completely forgot about running better ads. You forgot about increasing your selling skills. You forgot about getting more new customers, improving your profit margins, operating your business more efficiently, and all the other things you could do to improve your business. You forget about those. And you just focused on one thing, your current customers, those people who are currently buying from you. As important and as profitable as those other areas are, for now, let's just concentrate our focus on 3 areas pertaining to your current customers or clients. So 1, reduce client attrition, the number of clients you lose in a year. 2, increasing the lifetime profit value of each client and how much money you make on each client over the lifetime of doing business with you. And 3, getting more referrals from each of your current clients. Now, each one of these areas is directly related to your existing clients, and it is in your direct control, whether you own or manage a business, if you're an employee working for someone else, or if you're in a business as an independent operator, a franchisee, or an entrepreneur. Just for example's sake, let's say that you were able to reduce the number of customers you lose every year by half, and at the same time, you double the number of referrals you get, and then increase the annual profit value of each client by just 10%. And to keep it very simple, let's say that you run a very small business, and let's assume that you have a base of just 1,000 clients that you work with throughout the year. Now, let's say that you don't add any new clients during the year, and that 10% of your existing clients leave you for one reason or another. They, either they move away, they find someone else to do business with, they no longer need your services, they might have a relative gone into the business, they just get upset with you or a staff member, they don't like what you did for them, or that they die, whatever the reason, they just stop doing business with you. Now, on average, let's say that each of your clients spends $300 a year with you for the products you sell or the services you provide with them. Some will spend more, some less, but for now we're working with averages. Now remember, you're starting with a base of 1,000 clients. After losing 10% of those clients and without adding anyone new, you end up with 900 clients spending $300 each, which nets you $270,000 of income for the year. Now let's say that just 10% of those 900 clients, that's 90, refer another person to you during the year. That brings in another $27,000, which brings your total earnings up to $297,000. Not a bad year. Now, let's say that you made a few changes in your operation, nothing big, just a few simple changes in the way you do things. For instance, let's begin with the same 1,000 clients, and let's say with some extra attention, more regular contact with them, a little more service, some genuine interest in your client and the things they do, and what's important to them, that you can cut your losses by 50%. That means you only lose 50 clients during the year instead of 100. That's very realistic and easily doable. Next, if you increase the average amount of your profits you realize from each client by just 10%, with $300 in annual sales, that's only $30 for the year, or just $2.50 per month. There are a number of ways you can do that, such as you can upgrade the services your clients receive, sell them additional products, you get them to come back more often. You can negotiate better prices on the products you get from your vendors, and a host of other very easy to do things. Well, so far your income has increased from 270,000 to 313,500, or by 43,500, and that's more than 16%. And you've done it with some very small changes in two areas. Now, what if you were to begin asking more of your clients for referrals? What if you put together a system that included actual word tracks that you knew would they would produce positive, measurable and predictive results? Or what if you gave your existing customers some incentives or rewards to bring others to you? What if instead of sitting back and waiting for someone to refer another person on their own, you took an active role and put together a proactive system that would make it practically impossible for your clients not to refer others to you? What kind of effect do you think that would have on your business? Well, if 10% of your clients, 95, are giving you referrals now without any proactive effort on your part, if you made the referral process attractive, beneficial, profitable, and nearly irresistible to them, it wouldn't be unreasonable to double the amount of referrals you get. In other words, instead of just 10% of your clients referring others to you, you now have 20% giving you just one referral. Now your income from referrals jumps from 27,000 to 62,700, an increase of 35,700, or more than 132%. Now we're making some progress. So what happens to your total income for the year? Well, remember that we started with an income of 297,000. So if we add the income from your clients, 313,500, to the income from your referrals, 62,700, you now have a healthy 376,200, which gives you an increase of 79,200, or a 27% overall increase. Now, I think you'll agree that kind of increase in income in 1 year isn't bad, especially without bringing any new staff or employees on board, without adding any new clients, without spending any more on advertising or marketing campaigns, and without making any significant changes in your business operation. Now, I'm aware that the figures I've used in this illustration may or may not apply exactly to everyone's individual business operation. One business might be a neighbourhood sole proprietor, mum and dad type of business that sells to people who live around the corner, and they're making just enough to get by. Another business may sell to hundreds, thousands, or even millions of customers and generate millions of dollars in annual revenues. It really makes no difference. The point is that what the illustration demonstrates is that even if you don't add any new clients to your business, you can still grow your business, and grow it very significantly by doing a few simple things like keeping in contact with, taking care of your existing clients, creating additional value, benefits and reasons for them to do business with you. And you can do it so much more cost effectively than you could if you were attempting to create that 79,200 increase by going after raw new prospects. You see, even if you only did half as well as the illustration shows, you've still netted an additional 39,600 extra in your pocket. But what if you only did half of that? It would make a difference of 19,800 in extra income per year. Now, if you really want to see how this applies to you, go back over the example I used and plug in your own figures and see what would happen to your own business if you were to just make a few simple changes of improvements in a couple of areas.
Well, you've certainly covered a lot of ground, and you've given our listeners a lot of ideas. It's obvious that you know your